My name is Jeff Golden. I'm a member of the P.R.I.M.E Finance Advisory Board, and I had the honor and privilege of chairing P.R.I.M Finance in its formation period. Well, the honor of the association with the project and certain of the privileges for me continue, and the privilege that I have today is to welcome you to session 2 of P.R.I.M Finance's virtual Asia conference, which is entitled Disruption, Evolving Business Challenges. The topics we intend to cover include the use of technology in financial services, financial regulation and compliance, the business and regulatory challenges of integration, and new risks and opportunities as we reflect on this most extraordinary of times. My privilege extends to introducing our keynote and other speakers. We will come back to the panelists, each of whom is a first-in-the-class speaker. But to open, allow me the honor of introducing our keynote. Edwin Tong SC, Singapore's Minister for Culture, Community, and Youth, and Second Minister for Law. At the Ministry for Law, as you will hear, Minister Tong focuses on the development and promotion of Singapore's legal and dispute resolution sector. He also handles wide-ranging aspects of law reform, including intellectual property, corporate restructuring and insolvency, and the recent COVID-19 temporary measures legislation, which was brought forward in record time. Before taking office, Minister Tong practiced at Allen and Gledhill, where he was concurrently head of restructuring and corporate insolvency department, co-head of the litigation and dispute resolution department, and a member of the firm's executive committee. Minister Tong was appointed senior counsel in 2015. And as a point of personal privilege, I'd like to thank Singapore's Attorney General, Lucien Wong, a former law partner of Minister Tong, and one of the inaugural board members of P.R.I.M Finance. I'd like to thank Lucien for the introduction to Minister Tong, who despite a scheduling conflict that has arisen, has managed, he was very keen to get his message to this audience and has managed to tape his keynote remarks, which with our technology permitting, but most importantly, with the help of our head of secretariat, Camilla McPherson, we would now like to show to you. Camilla?
Thank you so much, Jeff. I'm just going to share my screen so everyone can see Mr. Tong's opening words.
Good afternoon or good evening, depending on where you are. Thank you to P.R.I.M Finance for inviting me to speak at your first Asia conference. Today is the second session in a series of 3 sessions on evolving business challenges. This session focuses on issues relating to the use of technology in financial transactions, including fintech, digital currencies, and smart contracts. I will share some thoughts on Singapore's approach and plans to support the financial sector in their development and use of technology. I'll focus on several key areas for Singapore: the legal services industry, dispute resolution, and intellectual property services. We believe that the key to meeting evolving business challenges is really to have a robust, strong ecosystem to drive legal services. Singapore is today ranked 4th among the global financial centers and 8th in fintech. As with most other achievements, this did not happen by chance. Singapore is too small for progress to just happen by itself. We are unlike the larger economies where there is a natural market, where free market forces will promote organic growth. Everything is really a result of design, with the government planting the initial seeds and then catalyzing the growth. For a sector, this would mean anything from developing the policies, framework, rules and regulations to anchoring key players in Singapore, creating a conducive environment for activities to take place, and also building capabilities to support the whole infrastructure and ecosystem. This whole ecosystem concept is critical for us. We need all the main and supporting players to be available to provide the necessary goods and services and support one another. Legal services, dispute resolution, and IP sectors are all supporting services that complement Singapore's key sectors, including the financial sector. And we develop these sectors with that objective in mind. As technology becomes more prevalent in the financial sector, we also seek to ensure that our legal, our dispute resolution, and IP service providers keep pace with these developments so that we can support the growth of our financial sector. Otherwise, not only will our financial sector lose its competitive edge, our services, complementary services at a site, will also fail. Let me first touch on legal services. Singapore is one of the most liberalized legal service regimes in this part of the world. We chose to take a calibrated approach in opening up the practice of law to maintain the top quality of our legal services. We introduced the Qualifying Foreign Law Practice Scheme in 2008, the QFLP, to allow foreign law practices to hire Singapore qualified lawyers to advise on Singapore law in permitted areas. This was to address the shortage of lawyers who could advise on complex financial transactions then. We also had the joint law ventures and formal law alliances for foreign law practices to formally collaborate with our Singapore law practices to offer parties who need both Singapore and foreign law advice. Today, we have many leading banking and finance lawyers with deep expertise in their fields here, both local and foreign, advising the largest global corporations and networks. The question now is, with technology coming into the fold, do we have sufficient quality lawyers who understand technology well enough to advise clients on the legal risk and implications, including liabilities, cybersecurity, data protection, compliance, and of course, many other issues? If not, then how do we address this gap? Can Singapore continue to attract and retain foreign manpower here as the world becomes increasingly globalized and competition for talent becomes stiffer, and as Singapore tightens its rules on foreign workers? And finally, how do we ensure that our legal sector does not fall behind other sectors in terms of technology? Currently, many lawyers who advise on new fintech innovations like cryptocurrency, blockchain, initial coin offerings, electronic payments, and the like are lawyers in adjacent fields who have been advising on financial services, licensing, regulation, compliance, and transactions. Some of them ventured into the new fields because their existing clients turned to them for assistance. Others were more entrepreneurial and saw a less crowded space there. We also involved some of them in shaping the policies in the fintech space so that they could become subject matter experts in those areas. Going forward, there will be a far more concerted effort by the government to equip lawyers with the relevant digital skills and understanding. We will start them from young, in their undergraduate days, ensuring a strong future-ready curriculum. Students, in turn, can expect more core modules, cross-disciplinary curriculum, hackathons, and research in technology areas in our law schools. We also encourage our people to get exposure from internships overseas and gain regional experience. To this end, we have built digital economy agreements for our professional service firms to access overseas markets, strengthen their workers' competencies. The aim is to imbue our lawyers with a mindset to embrace technology and seize opportunities, enhance capabilities within their own profession. Even as we develop our local talent, we will continue to work to attract top legal talent to Singapore to complement our local practitioners. We can really only be a leading jurisdiction with a strong, vibrant professional services sector if the best and the brightest work for us and with us here in Singapore. Some may have heard about the changes that Singapore is making to our work pass requirements and wondered if we are closing our doors to foreigners. I can assure you that we are not. Singapore thrives on being an open economy. The need to stay connected to the world is perhaps even more important than ever in times of crisis. The objective is to build a legal sector of international standards which can better meet the needs of businesses, both here in Singapore as well as from Singapore. One initiative that we have been working on in the past year or so is to develop a legal tech platform for the Singapore legal industry. The idea is to aggregate different legal tech solutions onto a single platform so that lawyers can better access them without having to navigate different software, different websites, apps, and fundamentally to really focus on the legal matters and the needs of their clients. The platform will have different tools that lawyers need: practice management systems, document management systems, discovery tools, legal drafting tools, and so on. It will also eventually communicate and interface with existing agencies that lawyers regularly and typically deal with. For example, ACRA, the Accounting and Corporate Regulatory Authority, or the Insolvency Office, the credit rating bureaus, and so on. Of course, given the sensitive client information, we also have to ensure security. Data has to be protected and meet the relevant industry and also regulatory standards. We are indeed very excited about this new initiative and will make some further announcements on this soon. Next, let me move on to dispute resolution, which is also a service offered by P.R.I.M.E Finance, one that is crucial because differences are bound to happen in any business transaction. And more importantly, resolving these disputes fairly, efficiently, effectively is a key component of our value proposition. As with legal services, the question is whether we have the expertise to deal with disputes involving technology, particularly in the financial sector. Singapore has developed a full suite of international commercial dispute resolution services, including arbitration, mediation, and litigation, and has achieved some results. The Singapore International Arbitration Centre, the SIAC, in its launch of its 5th overseas office in the US just last week, announced a record caseload of 1,005 cases as of October this year. Whilst the caseload statistics include 2 sets of related cases, it is nevertheless an impressive achievement. SIAC has administered a broad range of cases, including those which involve emerging fields like AI, blockchain, Bitcoin, cryptocurrency, which have increased over the past year, and we expect that to increase even further. SIAC is able to handle these because of the strength of their panel. Not just experts in dispute resolution, but also in specialist areas, even though there are no specialist panels per se. If you add the other international dispute resolution institutions in Singapore, including PCA, ICC, AAA, WIPO, which all have offices in our flagship integrated dispute resolution complex, Maxwell Chambers, businesses have access to even more service offerings and expertise. I will welcome P.R.I.M E Finance to set up a registry here too, at Maxwell Chambers. Lastly, let me touch on IP, on how we intend to develop IP capability and how we hope to help businesses access overseas markets. IP is integral in today's economy. With financial institutions increasingly developing and using technology, IP becomes all the more important. Financial institutions need to be able to formulate a coherent strategy to protect and commercialize their IP and also their intangible assets. One key capability required is to have a good understanding of how to value their own IP or intangible assets, as well as those of their clients. We are therefore looking at how to develop new capabilities in IP valuation. For example, by introducing new valuation modules to strengthen the professional competencies of intangible asset valuers in Singapore. In addition, the ability to manage IP is fundamental to maintaining a competitive edge. Singapore will continue to support talent and skills development through IP education and training. These include the Masters in IP and Innovation Management and the Specialist Certificate in Intangible Asset Management programs, and the Masters in IP and Innovation Management. We will also champion IP literacy as a horizontal skill set and equip financial service professionals with basic IP know-how. This is to cultivate better IP awareness and management practices in the sector. The other area that we are looking into is how to make it easier for fast-moving sectors like the financial sector and the fintech sector to exploit current trends by shortening the period from production conceptualization to launch, not just in Singapore, but also in the region. This will better support them in their overseas expansion plans, especially since many businesses use Singapore as a base from which to serve the region. To do this, the SGIP FAST program was launched earlier this year to fast-track the registration of patents, trademarks, and registered designs in Singapore. Protection can be secured in as short as 6 months for patents, 3 months for trademarks, and 1 month for registered designs. Businesses can also tap on our extensive IP networks with over 70 countries to accelerate patent protection in overseas markets. For example, Singapore is part of the Global Patent Prosecution Highway Network, which enables businesses to accelerate their patent applications in 26 countries. Singapore is also party to the ASEAN Patent Examination Cooperation Program, which speeds up patent applications amongst participating ASEAN member states. Moving forward, as we look to strengthen our position as a global IP hub, I'm happy to share that the government is working closely with our stakeholders and partners on the Singapore IP Strategy 2030. We will be sharing more details of this at a later date. At the end of the day, Singapore's core strength is in being nimble, adaptable, moving fast, striking whilst the iron is hot when it comes to opportunities and evolving circumstances. When there are new developments, we move very fast to update legislation and policies to support the changes and ensure that our companies and people are able to take advantage of them. For example, we put together the text of the COVID-19 Temporary Measures Act in 9 days earlier this year, helping to protect businesses and livelihoods. There are few countries in the world who can do this. As I shared earlier, we always keep a close eye on evolving global trends and developments, and when necessary, take concrete steps to keep ourselves updated and relevant. We continue to identify challenges and opportunities and work with our partners to do well in the good times and ride out the bad. So regardless of what disruptions and challenges we see in the financial sector, I'm quite certain that Singapore will be able to keep pace to support the sector. I hope this will set some context for your panel discussion later, and I hope that you'll have a riveting, engaging, evolving, innovative, and certainly enriching discussion. Thank you very much for inviting me once again, and I look forward to meeting all of you at some stage in due course. Thank you.
Well, we're very grateful for that opening. We're particularly grateful for the considerable effort that went into getting it to us in timely fashion so that it could be shared with this audience. In fact, we're grateful at P.R.I.M.E Finance for the interest in and support of the authorities in Singapore that we've enjoyed over a number of years now. The technical assistance program that P.R.I.M E Finance provides judiciaries around the world has been to the Singapore Supreme Court twice, and we look forward to returning. So with the benefit of that opening, let me next introduce our panelists. The session will be chaired by Paul Landless. Paul is a partner in the Singapore office of Clifford Chance, specializing in structured finance, derivatives, and financial products. He leads the Clifford Chance financial markets team in Singapore, but throughout the Southeast Asia region. He's also co-head of the firm's global tech group and one of Clifford Chance's true leaders in its fintech practice, with particular interest in data, cyber, artificial intelligence, smart contracts, and DLT uses in financial markets, trading, and risk management. And most importantly, Paul is also a P.R.I.M E Finance expert. Let me also introduce Professor Douglas Arner, professor in law at the University of Hong Kong. Professor Arner holds the Curry Holdings Professor in Law Chair and is director of the University of Hong Kong's Asian Institute of International Financial Law. And again, Professor Arner is also a P.R.I.M E Finance expert. Next, let me introduce Urszula McCormack, a partner and digital economy regulatory specialist at King Wood Mallesons. Urszula works out of both the Sydney and Hong Kong offices of her law firm. She's one of Asia's leading regulatory and digital economy lawyers with a focus on emerging technologies. She's an appointed member of Hong Kong's Securities and Futures Commission Fintech Advisory Group, its Financial Services Development Council's Working Group and the World Economic Forum's DeFi Working Group, and multiple other policy fora. And she's regularly invited to brief governments, regulators, and transnational policymakers. Urszula, by the way, is admitted to practice law in Hong Kong and Australia, and also in England and Wales. And then two more prime finance experts. First, Professor Tetsuo Morishita. Professor Morishita is the professor of law at the Sophia University School of Law in Japan. He's chair of the Payment Council on Financial Innovation of Japan's Financial Services Agency. He's a member of the JBA Tibor Oversight Committee and a member of the working group on Japanese banking systems of the FSA as well, and a member of its working group on financial market systems also. And then finally, again, a prime finance expert, Keith Noyes, independent non-executive director of OTC Clearing Corporation, a subsidiary of HKX, chief risk and compliance officer for Covario, a digital asset prime brokerage, and well known to the markets as a former senior executive of the International Swaps and Derivatives Association. So I'm going to turn over to you, Paul, and this very special panel that you've gathered. And we look forward to the next hour with great expectations. Over to you, Paul.
Thank you, Jeff. And just for some housekeeping, I think you should all be muted. And if there are any questions, please fire those through as we go on the chat function. We're going to talk to 4 topics, and then we'll look to stop just past the hour to go through some of those questions. And then we'll finish up with a round of predictions. I've asked my panelists to give me a prediction for life a year from now in terms of where we are with technology in the financial services space. So let's just kick off on the first subject. And what I want to do is just look at where we are and the journey so far. And really, since the financial crisis, we've been through an amazing amount of regulatory change. We've seen incredible restructuring of the financial services markets for both banks and non-banks in terms of how they operate and how they deal with their customers, their clients, and how they mobilize in terms of their new sources of liquidity. And we've seen an incredible amount of litigation and a lot of learning around how financial markets contracts should be interpreted, particularly around valuation disputes. And there's been a lot of improvement in terms of our process, in terms of our documentation, as well as in terms of risk management. And I think looking back, the crisis was very much focused on credit risk. And one of the questions I want to ask the team here, ask the panelists is, are we now looking at a different risk today? Are we looking at operational risk overtaking credit risk? Are we still fighting the last war with the wrong tools? Christine Lagarde was talking about on the 10-year anniversary that regulators are still implementing and still doing lessons learned from Lehman. But is the Lehman fallout now the wrong measure for sort of policy development going forward? Are we now looking at shadow infrastructure rather than shadow banking? And when we're thinking about too big to fail, systemic risk, size, interconnectedness, and the ability to substitute a player, should we be looking at the banks or should we be looking at major corporate unregulated tech players? And I think there's this incredible shift that seems to be in front of us. And I wanted really to sort of start off looking at this and perhaps go to Urszula first around this idea in terms of looking at, you know, the old regulatory architecture, old tools in terms of the current climate and the current dimension we're looking at. Urszula, what are your thoughts around that?
Yeah, thanks very much, Paul. Well, look, you know, the shadow of Lehman looms large still, but, you know, you're absolutely right. Operational risk is such an important component for financial institutions these days. and other institutions that are becoming increasingly regulated either directly or indirectly. And what we mean by operational risks are things that fall outside of of financial risks. It's the everything else risk that typically emerges from things like internal processes, resources, systems, and from various events like fraud, privacy issues, legal, environmental risks. And these are really difficult to lay off, except through sort of good management, sound governance, the right people, the right technology, lots of good decisions, a crystal ball, and then also things like regulatory engagement. So they're complex to address. And the reality is that humans are imperfect, systems are being developed, and we're still iterating and experimenting. And the increasing complexity and sophistication of our systems, of our data arrangements, layered with the increasing capability that we have with technology, result really in a different operational risk profile. Products and services themselves are becoming very interesting. Data analytics, blockchain, AI are all enriching those products and services. And so we're seeing new ones emerge. Digital wallets, remote onboarding, virtual banking, robo-advisors, automated rebalancing, ESG, the whole lot. And on top of that, we also have an increasing reliance on third parties. Everything from payroll processing through to messaging systems, analytics, security, right through to the sort of client-facing activities like lead generation, design, and even the way in which we sort of interact with customers. And this really leads to sort of a level of introspection within organizations to look at whether or not their systems really actually stitch together, to look at new technology in a very critical way to see whether or not it actually addresses a problem, and if it's also creating a potential, second problem. And that sort of issue around that flow on risk is also applicable to regulation itself. When we talk about regulation, when we talk about proportionality, necessity, there's also a real need to consider unintended consequences. And there can be some really profound systemic risks that result from, overreach. And this is especially true as we enter sort of a new advent of financial services. AML regulators, the likes of FATF, have known this for a very long time. They've warned about the risks of exclusion, of pushing people into the shadow banking sector, and so there's this real need to strike a balance with any new regulation or rules that come in to address these new risks, to make sure that we're not creating new ones. And I think one of the best examples that we have at the moment is how we grapple with the advent of virtual assets, and whether or not we create this beautiful, shiny, clean regulatory models that only allow professional investors, accredited investors, sophisticated investors to participate, but really risk pushing retail, people into, a sort of a shadow environment where there is a lot that's available now in P2P lending, in decentralized exchanges, in DeFi. So I'm going to pause there because I know we've got a lot to cover, and I'm really looking forward to talking about how we achieve that.
And it's just for everyone's benefit, it's also the Singapore Fintech Festival this week, and I think a lot of the buzzword is very much banking as a service. But this idea that, to Urszula's point, any regulatory move could readily ensure that retail customers could move to different markets, to different providers. And I think this regulatory boundary question is really interesting around, where does the regulated space start and end? And Douglas, this is a space you've been writing about and looking at in terms of where is systemic risk today in the financial system. And it'd be interesting to get your thoughts around, with all this outsourcing activity, the level of dependence that regulated players now have on unregulated corporates. What's your sort of thoughts post Lehman now as to where we are and also where we go from here? And I should flag, I think you're still on mute, but Douglas,
thanks, Paul. And I very much agree with the points that Urszula has made. But first, I want to say it's really exciting for me. I think I was one of the first P.R.I.M.E experts in Asia, and it's really exciting to have this P.R.I.M.E event finally in Asia. Now, I really wish that we were actually having the event in Singapore, but hey, I guess we can't have everything. So I'm really happy to finally have this, and I'm really looking forward to more of these. And maybe next year in Singapore, we can all actually go there and meet up, which I think would be a much more attractive alternative than the usual meeting place in The Hague in February, which is, if you will, really Asia is a far more attractive place to spend the winter than Northern Europe. So with that, I think it's really interesting when we look at the current situation. If we look back over the past 10 years, we can really say that finance was driven by three things. It was driven by the global crisis, it was driven by post-crisis regulatory changes, and it was driven by technology. And a couple of years ago, a bunch of friends and I put together a book with the Center for International Governance Innovation, CIGI, looking at 10 years post-crisis. And, you know, we looked at, were we fighting the last crisis? What did we miss? And I think what has been really interesting is to apply that in the context of 2020, COVID-19. What have we seen? Well, first, we've seen that 2020 is not 2008. The financial sector so far has not been part of the problem. It's been very much part of the solution. And that has been primarily about digital finance. From the first standpoint, the infrastructure, our digital financial infrastructure, our payment systems, OTC derivatives markets, which failed in 2008. We think about security settlement. All of these things have worked through pretty incredible volatility. So a plug for the regulators. That post-crisis agenda seems to have worked pretty well from the standpoint of building a more robust financial sector. But you know, what did we miss? And I think Paul and Urszula have both highlighted that. And basically what we concluded was that we really miss risks of technology. And historically, we've looked at these risks from the standpoint of operational risk. And you know, if you think about the Basel Capital Accord, or you think about other frameworks of analyzing risk, operational risk, along with legal risk, it has to be said, have always been sort of the orphans. And really, they didn't get that much attention. And no one would have really thought of operational risk as systemic risk. But one thing that if we think about COVID-19, we can all agree on is it has driven digitization. And what has that done? It's raised dramatically what my colleagues and I call tech risk. Tech risk is something far beyond operational risk. And I think increasingly there's an agreement that if we look at the biggest systemic risk today, it's cybersecurity. That's often identified not only as the biggest systemic risk, but the biggest financial risk, and even the biggest national security risk. Our traditional operational risks in no way catch that. And I think we can identify this as an entirely new category of risk, tech risk. What's our second aspect? Well, it's really around data protection and control. We'll come back, I think, and talk about this some more, but I think some of the biggest questions facing societies today are how are we going to deal with network effects, economies of scope and scale in the context of data. Third is around infrastructure. And we think about infrastructure, we can think about data dependencies, concentration in data providers, but we can also think about standpoint of infrastructure from the standpoint of cloud. And this is something that last year, systemically important financial institutions were kind of looking at cloud. But COVID-19 has driven cloud strategies, not just for new entrants, but for SIFIs globally forward in a way that no one would have anticipated before. And this creates all sorts of opportunities, but also risks. And the final one is really around what we call Techfin, the entry of big tech firms into financial services and the amazing challenges that that brings. And in some ways, the discussions around Ant over the past month bring us right back to that original topic of systemically important financial institutions and risk.
And I think also the other fascinating aspect is that we're still going through a lot of regulatory change. There's still new regulations forcing changes in systems, changes in process. And I think obviously the big one right now is LIBOR reform, where, to Ursula's point, you know, that there's so much systems dependency driving compliance, driving sort of regulatory response and implementation. But equally, when you're handling such a massive project like libel reform, you know, query the system's impacts, let alone, you know, broader litigation risks or other conduct risk issues. And Keith, I just want to get your point here as well, to get your views around, from your past life, but also looking forward to what you're doing today. Do you think regulators have actually misunderstood how the systems side really affects the ability to comply, but also creates new risks as banks try and adapt to what regulators require?
Thank you, Paul. Probably the best way to answer this is to compare my experience now on the board of OTC Clear with some of the issues I grappled with when I was at ISDA. So OTC Clear recently aligned the payment alignment interest to use SOFR as the discounting rate. And it was done very smoothly, and it immediately was done, and all clearing members agreed to the switch. Now, the industry, led by ISDA and ARC, have done a tremendous amount of work reaching out and getting consensus on various fallback provisions. And those are great if everyone agrees to adhere to them. And I know that there's a ISDA protocol out there right now, but there is a real risk that not all market players adhere to those protocols, in which case, when you actually have the transition to SOFR, there will inevitably be value transfer across portfolios. And if not everyone has agreed to the fallback provisions ahead of time, there are likely to be people who feel like they are justified to litigate to get value out of their pre-existing contracts. So I do think that the regulators have potentially left a minefield out there for the future and for dispute resolution authorities to deal with. I did also want to pick up on Ursula's point in terms of the whole regulatory transformation since the global financial crisis. One thing is clear is we used to call it the expensification of banking, is that the sheer regulatory burden of meeting all of the financial costs of regulation has forced concentration in the markets. There are fewer and fewer major banks providing the services, and the barriers to entry for retail and for SMEs has become higher. And at the exact same time as that was becoming higher, fortuitously, there was this brilliant new technology, the blockchain, that came along that offered a democratization of finance, transparency, cheaper transaction costs. And we see with the popularity of Bitcoin and the increasing popularity of DeFi that the retail and the SMEs are gravitating to this to get away from the overburden of the traditional financial markets, and in some cases simply not being big enough to be of interest now to these banks that have these huge overheads. Now, the blockchain industry, of course, has had its share of ups and downs since it started. There have been enough cyber hacks. There have been, everyone knows about the different dark market pools and stuff. But what we already see at Covario is that there has been an institutionalization of the business as more and more institutions have become interested. And my prediction is that as the institutions get involved, that will force professionalization of the blockchain market. And it will also lead to increased regulation in order for professional investors to feel more comfortable with that market. So I'm not sure which is the chicken or the egg, or whether it's simply a virtuous circle as the market moves to this new financial technology driven solution, which is in so many ways far more transparent and efficient than the traditional financial market.
And let's talk about globalization, because the markets are ever more cross-border. And I think one of the sort of themes post-crisis was very much how regulators were trying to harmonize, align their approach, their philosophy. We had a lot of G20 down, IOSCO-driven standards in the derivatives space, or even in benchmark reform. How much of that regulatory coordination alignment is being seen with responding to these new risks and opportunities with technology? In your view, Keith, do you think there's more alignment or balkanization? I think that's the term that we were hearing from the G20 last year that sort of post-crisis order was under strain. When you're looking at privacy standards, looking at outsourcing standards, if you're looking at crypto assets, would you be optimistic around regulatory alignment, or are you concerned?
I do think we'll get there in the long run. I mean, clearly, post-financial crisis, trade data reporting has been the ugly sister of the financial reforms, whether it's mandatory margining or capital requirements or mandatory clearing. Those reforms have generally gone fairly smoothly, while for trade data reporting, there continue to be disagreements over reporting fields, harmonization of data, to the point where regulators across the globe still can't aggregate data and get a sensible picture of the markets. I talked to some ex-ISDA colleagues recently, and they paint an optimistic picture, and I do believe that it's still heading in the right direction, albeit there will be data privacy concerns from certain jurisdictions that will make it a bumpy road. Again, I contrast that with the blockchain, where every single transaction that's ever taken place in Bitcoin or Ethereum is printed on the blockchain. When I put on my compliance hat for Covario, I can actually look up every transaction that's ever happened and get that history. And that's wonderful data to have. That's available to anyone who wants to do the work or wants to hire a technology vendor to get that information for them. So again, I see this as a positive technological response to what was very much a problem in traditional finance.
And this is an Asia conference, and very much just within this region. I think when you're looking at how different regulators have actually reacted to crypto assets, that's quite a dramatic, contrasting scene. When you're looking at China's response, Singapore's response, Hong Kong, and Korea, Japan. Tetsuo, what are your thoughts around crypto regulation and how regulators are actually reacting to digital assets and crypto assets? Tetsuo, I think you're on mute. I think you're still muted.
Yes. Okay.
You are. Great.
Sorry. I think at least for a few years, it will be the kind of mixture of cooperation, harmonization, and balkanization. First of all, regulators know that it will be difficult to achieve regulatory goals by themselves. They understand that cooperation between them is very important. So, for example, in the area of cryptocurrency regulations, they have already made various cooperations. For example, regulators created the crypto asset regulators directory, and also they have made roundtables on supervisory oversight of crypto assets. So they are trying to make various cooperations to address the various issues relating to the crypto assets. However, on the other hand, there is a divergence in the attitude how to control or how to respond to the crypto assets. For example, as Paul mentioned, there's a differences in attitude of China, Japan, and other countries relating to the crypto asset regulations. And also, in fact, in the roundtable discussions in last September, the Mr. Himeno, or the now commissioner of Japanese FSA, said in his speech that there is a growing dissonance between supervisors fragmented across the national borders and seamless financial service conducted across the globe. So they understand that there is some kind of inconsistency, or the each regulators aims to the different way. So I think it is inevitable, because the new tech could bring a very new business opportunities to their countries. But on the other hand, as we have already mentioned, it could bring increased risk, tech risk. So each country is trying to find a good balance between them. And it is difficult to find a common sense or common perception regarding the good balance on this issue. So I think it will take time to get real harmonization in this field. However, what is important is to continue the communication between the regulators or trying to cooperate to identify issues or to address various risks. So from such viewpoint, I think that private sectors could be a kind of bridge of regulators in different countries. So private sectors could provide various information to regulators or to have the opportunities to communicate the regulators from various countries. So by doing so, I think that harmonization or cooperation or communication could be increased.
Doug, I mean, one of the observations I have with the MAS, but also speaking to the SEC and other regulators, is the sense that they too need to innovate and they too need that support from the private sector that Tetsuo is talking about in terms of their own capability to supervise. We've heard about soup tech coming forward now, but also, you know, where do they have the talent and the capability to manage this new environment? But Douglas, would you also say divergence is inevitable, that harmonization will take time, as Tetsuo would make out, or are you more optimistic that IOSCO will, you know, will be followed and drive common standards across jurisdictions? What are your thoughts around regulatory harmonization?
It's mixed, and I think if I look forward about what I think about the themes driving finance over the next 10 years, I would highlight technology, I would highlight sustainability, and then exactly as we're discussing, I would highlight what is going to be probably a decade-long tension between globalization and fragmentation. We're seeing an increasing focus at the G20, at the Financial Stability Board, elsewhere on exactly these tensions. Now, of course, many of the discussions about fragmentation particularly arose in the OTC derivatives context. But I think going forward, many of the discussions around fragmentation are increasingly, as Keith and Tetsuo were highlighting, focusing on tech issues. And for me, I think the area where it brings it together more clearly than any other is around data. And this is because what we're seeing is very different approaches emerging to data in major jurisdictions around the world. And in some ways, I kind of think of the world as divided into three different groups. You've got the US, which has huge technology platforms. You have China, which has huge technology platforms. And you have the rest of the world, where those huge technology platforms from China and the US want to go. And the rest of the world is very much trying to figure out how to deal with this challenge from the standpoint of data. And I think the EU has been really interesting so far. And if we think of this sort of combination of GDPR, the General Data Protection Regulation, and its personal control over data, combined with open banking under PSD2, the Payment Services Directive 2, I think that has had a big influence, particularly all over this region, but also around the world. But it's interesting to see that over this past year, attitudes in the US in particular have been changing very rapidly with new Department of Justice actions against the big tech companies. And this seems to be one of those areas where there is bipartisan consensus in the US about going forward along this path. And I think finally, what's been really interesting is to see the moves in China this year. Of course, we've all been very heavily focused on Ant, but China is deciding to take a range. It's revealed a new data privacy law, which is taking certain elements of GDPR. It's bringing in new approaches to platforms, e-commerce platforms. And we saw just today announced by China discussions about new approaches to financial services data in order to limit the dominance of those players. And I think what is interesting is that we are seeing a lot of data localization requirements that are a big headache for financial institutions, which think about data on a global basis. But from the standpoint of different countries, they can make a lot of sense. National security, financial stability, competitive reasons. And I think going forward, this is going to be one of our biggest challenges, is cross-border data. And we can think of it from a legal and regulatory standpoint, but we can also, as Keith highlighted, think of it from a technology standpoint. Some of the most exciting developments in technology today are really around federated data storage and federated data analytics.
And I think on that, I heard the phrase, obviously, you know, data's the new oil, but actually artificial intelligence is the new Model T car in terms of the analytics. It's our gas guzzler of the future. And I think this question around lack of standardization around AI, you know, do we need a highway code for our new vehicle of the future? And is there going to be this cross-border consensus, this consistency as to what do we mean by AI governance and ethics? But equally, what I'd like to talk about more is also what about legal reform in terms of more certainty, and as well as looking at standards, looking at regulation around AI. But what about where the judges or where there's a role for legislation in terms of providing certainty, providing guidance for the innovation? Where do we see those blockers? I was interested to see the minister talking about Singapore's role around IP and actually looking to accelerate you know, IP reform, looking at accelerated patent protection. That's clearly a space where various jurisdictions will look to advance where they are. We've had a lot of activity around electronic contracts to date, but where do people still feel there are blockers? And where do we think legal certainty is still needed? Tetsuo, what are your thoughts around that in terms of the future?
Yeah, actually, the legal uncertainty is one of the serious source of operational risk. And by getting legal certainty, the new business will evolve, and new players will come into the market. In fact, Japan enacted new legislation regarding crypto asset in 2017. And after that, various new players enter into the crypto asset market. So with such a clear regulation framework, we could get a new entrant, a new business. So I think that the legal certainty is very important part of that. However, I think getting a legal certainty in the area of regulation is much easier comparing to the getting a legal certainty in private law issues, because in private law area, the harmonization, the establishment of principle would take long time. So, for example, even in Japan, regulatory law relating the crypto asset has become clearer. And we have various legislations and regulations. However, private law issue is very unclear. And court issued a little bit old-fashioned, from my viewpoint, old-fashioned judgment. And it would take time to get a legislation regarding a digital asset. So such kind of legal uncertainty from the private law viewpoint would be one serious issue we need to consider. So legislators should respond with more speed. And also another area of legal uncertainty is what Douglas mentioned, the data. And now in Japan, it is very unclear how and to which extent financial institutions could use the customers' data. Because of that, and the banks has a various concern, bank secrecy, whether the GDPR, privacy. With such kind of concern, banks and financial institutions hesitate to effectively use the customer data, even though they have a huge amount of data. If they could use such data effectively, they could bring a more efficient or more a better service to the customer. So to which extent relevant parties could use what kind of rights of the banks or financial institutions regarding the data. is one area which we need to develop as soon as possible.
And Urszula, I think when you started off, I think you were talking about, you know, all the range of business products and services are underway, and how regulatory overreach might actually create new risks. But where do you see opportunity for regulators to provide certainty for judges or legislation to give innovation that added certainty and guidance? Where do you think the main obstacles are now?
Yeah, look, great question. And I think looking right across Asia, you know, each jurisdiction is at a different stage. And frankly, even some of our most developed markets are still grappling with some pretty fundamental issues. And in fact, some of the emerging economies are galloping straight through to, you know, really great digital legislation. I suppose just to sort of whip through some of the key areas I see, the first and most fundamental is digital equivalence legislation, making sure it's absolutely clear when and where you can have an electronic signature, contract, you know, information provided. It is, you know, the foundational layer for everything. And, you know, a number of jurisdictions still developing their regimes, or in fact seeking to sort of innovate them to be able to provide certainty for things like smart contracts. That also needs to be, you know, squared with practical blockers. So if you have a place like, you know, the Philippines, you know, might well have even anti-red tape legislation, but still such a fundamentally cash-based economy, lots of practical blockers that are in place, you know, largely tied to things like receipts. The next area, you know, to my mind, you know, which is already starting to really resolve itself, is this point around payments and value transmission. And I include within that both classic fiat money, but also virtual assets. And that's where the Financial Action Task Force has played this really interesting central transnational regulatory role to bring together, you know, some fundamental standards across a number of, you know, value transmission services. You know, at the same time, the areas of uncertainty for virtual assets that still need to be developed are what we call certainty around digital twins. And so when I create a digital representation of a real world asset, how do I square those two things? Do I deal with it solely by contract, or are there some statutory mechanisms to help me do that? And we're seeing, you know, the likes of Liechtenstein already enacting some legislation to really support, you know, that real innovation in that arena. At the same time, we need some certainty around the ongoing status of cash. You know, and we are seeing some jurisdictions, Japan, Norway, reaffirming that they envisage that cash will have a role to play, even as they start to unfold their CBDC projects. Jurisdictions in the US banning stores that only accept non-cash payments, and even Australia abandoning plans to restrict very large cash payments. So that ongoing status of cash in the economy and the legal certainty around, you know, physical notes and coins will become important. On the technology side, yes, around AI, but you have a number of players that really say, well, look, leave us alone. There's a lot of prudential conduct standards. There are a lot of data standards that we're already, you know, grappling with and dealing with and implementing. And so maybe we don't need anything else. But, you know, when you look at things like standards like ethics, you know, transparency, fairness, it is really evident that some more work needs to be done there. We'll touch on this later, but I would like to talk about the liability of software developers, because it really kicks in a lot when we talk about decentralized actors and arrangements. And then the final one, the BMOS data, you know, how do I square, you know, the insatiable demand for transparency with fundamental rights of privacy? Privacy regulators are strengthening, you know, that will be a battleground going forward. When is data truly anonymous? Some say it's never. And then, you know, what do things like ethics mean, and how do I really square all my obligations? So just a smattering of the areas where, you know, that legal certainty will become important. Is that a role for regulation, or is that a role really just for us to develop case law, to develop practice, best practice standards? You know, I think that the mix of that is, you know, the answer to that is, you know, real blend of all of those.
And I guess another area, of course, is how do regulators actually apply their existing policy, and where do they enforce? And I think, you know, one of the areas might be to what Douglas was talking about in terms of, back office area. There's been so much front office focus and front office enforcement and front office risks that have gone under a lot of regulatory focus, particularly around conduct. But where are we now looking at that back office space around, satisfying outsourcing requirements, looking at, those operational dependencies? Where might regulators now turn their eye? And equally, where might our next disputes, exist? Where will the litigation be around digital assets, electronic contracting? And I know, Douglas, you talked about there being some consensus around big tech, but what's your field for what we should be expecting on the horizon around government activity or regulatory enforcement, as well as potentially litigation amongst private actors?
Yeah, I think from the compliance standpoint, we can say that probably the big issues that have been increasing in attention: cyber, loads of new cyber regulations, loads of new monitoring, and that eventually leads into enforcement. Second, all of these issues around data, both data privacy, but also as we get into some of these bigger, deeper questions in different societies about use, ownership, control of data. All of these things mean that you're going to have different approaches, which are going to lead to conflicts across borders in the context of data usage. And I think that if we think about what we're seeing from the regulatory standpoint right now, what has been really interesting in 2020 are a couple of recent enforcement actions. I can think of a couple involving a couple of big financial institutions in the UK, FCA enforcement actions, where essentially these were about digital regulatory reporting. In other words, financial institutions had improperly or not properly reported tens of millions of transactions. And that resulted in fines of tens of millions of pounds, which is actually on a per transaction failure reporting basis, not very much. But all told, in addition to the fines, were requirements to put in place systems to address these requirements. And I think the other big one that we saw that highlights exactly this was a big enforcement action a couple of months ago against Citi in the United States, 400 million settlement, but it wasn't just the amount of the settlement. It was a requirement for Citi to rebuild its IT systems, to allow those IT systems to deal with regulatory reporting and in particular risk data aggregation, our sort of BCBS 239 requirements. And I think what we're now seeing is that the regulators are focusing in on financial institutions' internal IT systems. From the standpoint of compliance, they're expecting use of technology for compliance. And if the technology is not there to comply with these SupTech requirements, they are going to take action against financial institutions and not only fine them, but mandate them to put in place new tech.
And of course, the irony is, as you put in the new tech and you're finding the best tech, you're having to go out on the street to rely even more. So there's a sort of vicious circle. And I think this sort of innovation dilemma, if you will, just, adds another question for regulators around, how is that bank supposed to win those audit rights against that, formidable tech player? I think, Keith, good to get your thoughts as well in terms of your own, role on OTC Clear as to what you're seeing, but also in terms of your role now as a risk officer. Where do you see enforcement or regulatory focus to come? And where do you think disputes might appear around those areas of uncertainty or around dealing with these new types of assets? And Keith, you're on mute.
Thank you. Sorry about
There
that.
you
So clearly right now, the regulatory focus in the Bitcoin cyberspace is on AML. And we've seen recently several exchanges have been in the news. There have been penalties. There have been people having to flee various towns. There have been arrests. And that's very much a legacy problem of the industry from its early stages, not paying enough attention to AML issues. before. Urszula mentioned the Financial Action Task Force. One of the things they recommended recently is a travel rule, which is a requirement to disclose beneficial owner on all cyber trades. So when you do a Bitcoin trade, not only do you have the transaction on the blockchain, but you must tell your counterparty, communicate to them the beneficial owner. And several different groups have worked around the messaging standards for that. And it's interesting, each of those groups now is able very seamlessly to communicate to each other that beneficial owner information, but very similar to the trade reporting problem in derivatives before is each of these protocols is yet to link up and be able to speak to each other. So right now for that AML problem, we have several different solutions and don't have a harmonized one that addresses the whole market yet, but I think that will come. Another thing that obviously was of concern has been the resiliency of exchanges. And it's interesting to see that actually the exchanges have already solved end of the waterfall event problems that continue to vex clearinghouses, because starting up from scratch, every single member agrees to variation margin gains haircutting if there's a default. And so they're automatically able to flatten the book through that. At the same time, there's a technology vendor out there that is quickly becoming the SWIFT of the cryptocurrency world, providing all of the same services that SWIFT does and the ability in a very safe way to transfer coins from one exchange to another and to provide the messaging for that. So those are positives. The other area to look at where the regulators are taking a closer look is it's very clear that the central banks don't like stable coins and they don't like Libra. If you look at all of the literature right now, I know also there's a BIS paper out now on stable coins. Stable coins are going to come under regulatory pressure, without doubt.
Sorry, we can't hear, Paul.
Sorry, I've made the crime now as well. We've all committed the same offence. But I think good to get your thoughts also, Tetsuo, around where do you think regulators will focus their attention? There's been a lot of focus around being technology neutral, technology agnostic around whether a bank is going to use a DLT solution for A, B, or C. And to Douglas's point, I think sort of radio silence as to how Citi or other banks go about ensuring systems of control as to what their selection will be on various use cases. But do you think regulators will be more specific around different types of technology, or will they be looking at enforcement of third-party players?
Yeah, as Paul mentioned, the regulators like to be technology neutral. However, it is inevitable for regulators to take various regulatory development in their new regulations. However, I think that it's very difficult for regulators or legislators to expect or to forecast exactly how such a new regulations, new technology could be used by private sector. So for example, even in case of Japan, when we made legislation on digital currency, we didn't expect how, to which extent such a crypto asset could be used. So always the private sectors or business go fast. So it is very difficult for regulators to be forward-looking and to find out the very appropriate regulations for the future businesses. However, at least the very important area for regulators is, as Keith mentioned, the one is AML. And the other is to enforce the regulations and not leave the criminals free. So for example, in Japan, we experienced a huge hacking event. If such criminals are left free, the trustworthiness or the feeling of the fairness or the trust in the market of the society will be lost. So one of the important of the regulators or the government, including the police, is to address such kind of activities of criminal. And one more thing, you mentioned about private disputes. Which kind of private disputes will increase. Inevitably, the private disputes relating to the data or blockchain, use of blockchain, smart contracts, or AIs will increase. But the issue is how such a dispute should be or could be resolved by private parties. And if the current court or judges could appropriately or effectively resolve these kind of disputes. At the very beginning, Mr. Tong mentioned that Singapore is a center of the arbitration, and they could offer the dispute resolution for such a technological disputes. And as a member of the P.R.I.M.E Finance, I think that the P.R.I.M Finance could contribute to such a kind of difficult disputes, including technical issues. And yeah, that is my thought.
And Urszula, we've been busy looking at AI standards and AI governance for SIFMA, and it's clearly a space that's moving fast. And I think the P.R.I.M.E in the UK is now already looking at proposals in this space. We've had Singapore very active around AI regulation, but also a set of principles around fairness and ethics. What are your thoughts about regulatory enforcement or areas of litigation and uncertainty on liability as to, can we identify causal responsibility to key designers?
Yeah, look, a super interesting topic, and, completely agree that this will be, a real focus area. We're even looking at it in the context of, if you are designing an algorithm that spits out news feeds in a certain manner, ought you be regulated in the same way as someone who's putting together a research report? So is the absence of human curation in that report, destructive of that, that regulatory link? So, really looking at sort of the existing regulated activities through the lens of the application of a new technology, is something that's important. Likewise, if you deploy something that has the capability of allowing people to, invest money and, yield a profit, that is effectively passive, ought you regulate it in the same way? And, do you ascribe liability in the same manner? And if so, how? If you don't have the same concept of, issuer, dealer, exchange, and that's something that, working quite closely with industry on. To their great credit, I'm also seeing regulators very closely focused on it, and not just looking at it through a lens of, DeFi, we must focus on DeFi, it's all related to virtual assets. Actually looking at the threads that are sort of really common across a number of these technologies. So, in the area of DeFi, how does that tie into to how we look at automation, and smart contracts more broadly? So, that piece, is absolutely happening. But I think what that has really showcased is that we need to look at the law beyond just classic financial regulation. We need to look at how other areas of risk have been dealt with in the past. Look at what existing hooks we have in legislation. So developers who have developed hacking software have been pursued not because there is necessarily a specific regulatory hook for them, but because they are, convicted of aiding, abetting, they're conspiring, to hack. And so, that legal hook already exists, and that's a very important piece. What is already out there before we barrel down the route of adding more and more regulation?
Okay, well, I'd like to ask a couple of questions. We received some really good questions from the audience, and really, again, please do fire more through on the chat function. The first one's interesting because it's really asking about our thoughts on the Minister's remarks around Singapore's own plans as being a legal centre for managing technology-related disputes. Do we see Singapore taking the lead around IP advancement, Tetsuo's point around our being an arbitration center, or do we think we'll have a multipolar Asia in terms of which jurisdiction is going to be leading as a sort of legal ecosystem around managing this new digital economy? I don't know, Douglas, do you want to go first with any thoughts around where you see the key kind of activity in terms of legal thinking and which jurisdiction will be most responsive to the market's activity?
Yeah, it's something where we're seeing a lot of work. We've seen lots of efforts from Hong Kong and Singapore in particular around dispute resolution. But I think we're moving into, as Minister Tong has suggested, a somewhat new direction. And that is really this idea of legal tech. How are law firms, legal practices, regulators, RegTech, how judiciary, how is the judiciary, how are these all using technology? And I think from this standpoint, jurisdictions that are able to think through how best they can incentivize use of technology themselves from the standpoint of data reporting requirements, from the standpoint of dispute resolution systems, that those systems are likely to put themselves not only in a good place from the standpoint of their own future economic development, but also from the standpoint of regional competitiveness. But I really think that the key is openness. I think where we've seen the most successful global legal markets, they have really been the ones that have been very open to talent from all over the world. And I think that this going forward is probably still going to be the key.
Urszula, what are your thoughts around which jurisdiction being a main ecosystem, or whether it's really the focus is going to be which jurisdictions enabling the development of law firms in terms of their own use of technology? And actually the next question is partly addressed to you and I around what's the impact for law firms, but we could get your thoughts.
Yeah, well, I think there's also a really significant COVID component to it all as well. Even within, our own firm, across, institutions generally, we're all digitalizing, but we're also working cross-boundary. That's my role now is cross-boundary, cross-border, lots of work in a number of regions. A lot of the work I do for governments is, again, cross-border. Don't need to travel. We're discussing issues. But what I would say is that a lot of really interesting innovation is also driven by digital government. And, what I see out of, the attraction of, the private sector is also when there are strong signals from government around, adoption. And that's, to own processes, but it's also to the establishment of APIs into golden source data, and so forth. So something like a digital Thailand really serves as a real inspiration for a lot of the jurisdictions in the regions, and is really resulting in a lot of really interesting development, right across the region, that sort of enablers, really stemming from, government engagement in that digital discussion is very important. And then that goes right into the question of soup tech and efficiencies around compliance.
The next question is a very good one, and I'll just direct this to Keith. If you look back at the derivatives markets, certainly pre-crisis, we had the derivatives markets innovate rapidly. It grew amazingly quickly. A whole range of asset classes developed with the arrival of more and more players. And we had the market taking the lead with conventions, the market taking the lead with process, operational techniques, best practice, but also documentation, with the regulations catching up. And then we've ended up with the regulations now dictating process, dictating documentation design, dictating opinion questions and requirements, the regulations dictating the players, the systemic linkages, the way execution is taking place. All of that's regulatory reshape of what was a market-driven theme. Do you think we'll see the same with fintech more broadly? Do you think you've talked about crypto exchanges with its own advanced standards, operational processes being set by the market, and with documentation and transactions will have over time of sort of market sort of conventions, but do you think we'll see regulations overtake that and influence the direction of innovation and reform?
I mean, I guess the short answer is yes. The longer, more nuanced answer is to say we're probably still at the stage where people are using, countries are using sandboxes to look at financial innovation and looking to see which are going to be the technological winners and losers out of it. And, you know, with the exception of AML, there's still a fairly light touch regulation in the crypto space. I do think with DeFi becoming more popular and more institutional money and more fundraising being done in that space, that will drive more regulation, because the people and professionals who go into that market won't be able to go into that market in some cases unless it's regulated. So again, it's a chicken or egg thing, but I think inevitably, as the market grows and evolves, regulation will grow and evolve with it. I guess we all hope that, you know, rather than the financial crisis where they look back and say, you know what, we have this monster market that's gotten out of control, that it will be more of an iterative process this time, such that the regulations are commensurate with the risks as they develop. But that will also require the regulators to be very savvy about understanding the technology at the same time.
I'm going to finish on one more question, and then I'm going to ask the panel to provide some predictions for the future. But the last question's a really good one. We talked earlier about lack of harmonization, this sort of fragmented scene between jurisdictions around responding to outsourcing issues, data privacy, virtual assets, DeFi. What about the different types of regulators? You know, between the antitrust authorities, the privacy regulators, the prudential regulators looking at safety and soundness, others looking at the market, customer protection, but also fiscal authorities. And one of the questions here is very much, do we think that fiscal authorities or other regulators may, in and of themselves, delay blockchain adoption or other technology implementation, because there's a disagreement within jurisdiction amongst different types of regulators around what to do with developments with new forms of payments, particularly around CBDCs. Do we see that disalignment across the type of regulators? I don't know who wants to take that. Douglas, do you want to have a go at that?
I think I'll make a couple of remarks there. The first is really this idea, really drawing on what Urszula was saying about digital infrastructure and the fundamental role that can have. And we've seen absolutely amazing results from countries which have adopted a combination of sovereign digital ID, interoperable electronic payment systems, simplified account opening, all to deliver a variety of government goods and services, as well as support for the private sector. Bill Gates at Singapore Fintech Festival today was highlighting exactly this sort of path. And I think that from the standpoint of fiscal authorities, this idea of digitization of infrastructure is actually tremendously important. It reduces what we call leakage. It makes it less expensive to deliver things, and it also reduces corruption. It also, as you formalize the economy, draws lots of players into that formal economy, which then begin to pay taxes. So I think from one standpoint, there's a lot of opportunity. I want to highlight, though, from the fiscal standpoint, one other, because it's come up in two conversations I've been in this week. And that is when we're talking about the big data firms, one of the determinants about what happens may be tax treatment of cross-border data. And this is something where the OECD, as a result of a G20 initiative, had made a lot of progress over the past few years, but then it had gotten stopped with the current administration in the US. And I think it's going to be really interesting to see if this starts moving forward again. Because after all, if we can agree a way to tax essentially internet firms, that takes us a long way to dealing with a lot of the other issues.
Urszula, do you have any thoughts around lack of coordination between regulators, antitrust versus privacy versus fiscal versus prudential and market supervisors?
Yeah, look, I primarily see, the biggest, looming issue around the collision of privacy regulation with the drive for transparency. It's a very difficult issue. If you think about the sort of desire to stamp out child exploitation, it's very hard to argue against transparency. And yet we tolerate a very large amount of money laundering. And, there comes a point at which we will destroy privacy, and we need to recognize that privacy is protected in constitutions. It is a fundamental human right, and it isn't a right to be anonymous, but there is a sphere in which we're entitled to operate. And so I think that point at which jurisdictions and regimes are comfortable will not be harmonized. There will be a difference between jurisdictions that adopt more or less, or that are now allow more in the private sector versus the government, or vice versa. So I think that will be an area of differentiation, and we'll also see a level of differentiation around, to what degree, developers become liable. You have arguments in certain jurisdictions, as you can guess, the code is speech. And others, a very strong interest in adopting a heavier hand. So I see a lot of forks in the road, and I see a lot of regulators really taking different, policymakers taking a really different stance, from one another.
Okay, well, look, thank you very much. I just want to now ask all the panelists to give me, in 30 seconds, a very short and dramatic prediction for where we'll be for the P.R.I.M.E Asia Conference 2021, end of next year. Urszula, I'll let you go first. 30 seconds.
We'll be talking about these issues, but we'll be another step down the road. We'll have a lot of live examples of where things are going wrong, where things are going right, and a richer landscape of regulatory ideas. I hope the ideas are stronger, and they're really, increasing the sort of the depth of our sort of view on there. The only other additional add is that we'll be looking a lot more at big tech. We'll be looking at the supporting infrastructure, and that extends to cable, extends to space assets that support all of this new infrastructure at a digital level.
Thank you. Tetsuo, over to you. 30 seconds, please.
Okay. One brief comment regarding the issue of the comparison with derivatives market. In case of derivatives market, ISDA existed. But in case of digital asset, what kind of parties could be a next ISDA? It could be an issue, and there could be a difference between derivatives market and digital asset market.
Thank you. Keith, you're on mute. If you can give us your 30-second prediction.
Sure. Central bank digital coins will be the most transformative financial innovation since the ATM machine. It will provide fast speed, incredible efficiency, low cost, trustworthiness. You will not have to worry about forged banknotes, but it will also give central banks information on exactly where you're spending your money and with whom, and it will bring up huge privacy issues.
Brilliant. And Doug, you're on mute as well. Doug, go for it. 30 seconds, please.
Absolutely agree with Keith's point, but I'm going to highlight two things. A year ago, I was highlighting the conflict between data reg and financial regulation, and that, I think, is here faster than I thought, and it's going to be with us next year. But looking forward a bit more optimistically, where do I think the big growth area in compliance is, but also the big opportunity? It's around sustainability regulation. That's the new explosion in terms of regulation, but it could be good.
And I have to make one as well, because I hate to miss out. I would add to this convergence between sustainable finance and technology, data analytics, and blockchain usages around visibility, transparency, and reporting. So I see this convergence of technology and sustainability, which will have regulatory support and some degree of common convergence from regulators around that. So on that positive note, if I could pass back to Jeff. Thank you, Jeff. Over to you.
Well, thank you, Paul. I'm tempted to close by just saying, wow. I mean, this session, this past hour has been informative. It's been inspiring as well. I can't think of a better group to hear from on these topics than the one we've just heard from. Paul, I want to thank you for your leadership and chairing the session and moving it around as you did. It was, I can't believe it. We've covered as much time as we have, because it really was masterfully done. And to the rest of you, it's clear that you had the experience to inform, but I got a sense that a fair amount of work went into your preparation for this program as well, and we appreciate that. It really, really was a very special event. I want to thank the audience too for joining us, and we know from past experience that this tape, which will go on the library of programs that Primetime has featured, will be viewed by many others around the world as well. So thanks again. A couple of almost housekeeping matters that I promised I would mention before signing off. This is the second session in our Asia conference that we've been running. Our final session on disrupted dispute resolution takes place on the 10th of December at 10 a.m. Hong Kong time. And do join us for that one too. There's a sign up link. It would be showing in your chat box now. Again, I'd like to thank our sponsors, Clifford Chance, our global law firm sponsor. I'd like to thank DTCC. I'd like to thank LCH, and I'd like to thank Rudder Associates for making this event possible. I'd like to thank Lexis and MLEX also for their support. And if you are interested in sponsoring a future event, please get in touch. The decision's been taken at board level to continue the series into the next year. Similarly, P.R.I.M.E Finance is a not-for-profit charitable foundation, and it accepts donations through the Friends of P.R.I.M E program, and those donations support our work. And if you would like to make a donation or find out more, please contact the Secretariat using the details that again are shown in your chat box. So you may consider yourself lucky, because if there was more time, I would tell you at great length why so many of us have believed in this project and have supported it, and why we would encourage you to do it as well. But instead, I'll refer you to Camilla McPherson's introductory remarks in the first session, available again in the recording of that session, in which she spent more time setting out the P.R.I.M.E and its mission, and did an excellent job of doing that. But before I say goodbye, because I wasn't invited to make a prediction, but I'd like to sneak one in, use the prerogative of closing to do that. It's actually inspired by a comment of Professor Morishita's, in which he reflected on the possible relevance of P.R.I.M.E in the period ahead. And it's also premised on a fact. And the fact is that a number of us believe that the P.R.I.M.E Finance offering is a unique one. More than 200 experts on our panel of experts from around the world, reflecting more than 6,000 years of relevant experience. And my prediction is that, just as happened after the global financial crisis, but very possibly again in the year ahead, we will find ourselves at a right place at a right time, and a resource that could make a real difference. Now, that's only going to happen if we have the wider support of our audience here and others with whom we've engaged, to make sure that those who would benefit from that experience are made aware of it. And finally, I'd like to draw on the other professors' opening remarks about how nice it would be if we could all gather again in person. I've counted on P.R.I.M.E Finance for many years now to give me the excuse to get to Asia at least once a year. And I'm missing that. And so I do hope that when the P.R.I.M.E Finance Asia Conference next happens, it will be an excuse for us all to gather. But in the meantime, be safe, be well, And thanks for your support for this event. Thank you very much.
Thank you very much.